Qantas delivers a boom half-year result, but don't expect cheaper airfares anytime soon. Medibank explains how it got hacked by Russian criminals, and Australia's biggest waste management company is getting its pen pushers to drive garbage trucks in an effort to alleviate worker shortages. It's Friday, the 24th of February, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, your interview today is with Dr. Sylvia Pfeiffer, the CEO and founder of CoView. This is a really interesting chat.
Yeah, so this is the technology provider that allows for telehealth across the country. CoView, the company, was spun out of CSIRO. The technology was developed in that centre. And we talked to Sylvia about how it has changed health in Australia. Now, obviously, the pandemic has made a massive difference to telehealth, and it's opened up literally the country for telehealth. But Sylvia's got plenty to say about it, and just particularly how beneficial it can be to regional and remote Australians, and what government policy needs to be about it. And she's not totally happy with how the government's run things.
Yeah, and look, for someone who doesn't like to leave the house for anything, telehealth is a blessing. It's just one more thing I can tick off the list from the comfort of my own home. Anyway, it's a really interesting interview. It's coming up a little bit later on. The main story this morning, though, Sean, Qantas has delivered a record half-year pre-tax profit not long after recording massive losses and accessing hundreds of millions of dollars in taxpayer money to stay in the air.
Yes, the national carrier announced a tripling of revenue for the 6 months to the end of December on the back of much higher airfares and a return to the skies by travellers. The other side of that coin is that Qantas has gotten rid of between 9,000 and 10,000 people during the pandemic, so the cost side is much better as well. The company also announced a $500 million share buyback, something that doesn't sit well with some market watchers who argue that $500 million should be repaid to the government or maybe given back to customers in the shape of lower airfares. Overall, the company pre-tax made $1.4 billion versus a loss of $622 million 12 months earlier. Investors weren't that impressed, though, saying load factors came off at the end of last year, even though capacity didn't increase. Also, Qantas has much bigger capital expenditure plans than previously thought. In fact, it will receive a new aircraft every 3 weeks for the foreseeable future, and it's spending about $100 million upgrading its lounge network. As a result, its share price fell 6.5% yesterday to $6.05.
Sean, you and I both have roles to play on this podcast. You are the expert / nerd, and I am the man of the people.
Yeah.
And as the man of the people, I ask you, what about ticket prices? Because that's what we want to know.
You can be a nerd and still be worried about ticket prices, Michael.
Yes, I'm not saying the two are exclusive. I'm just saying that you are a nerd and I'm the man of the people. So please go on.
Well, Alan Joyce, the boss of Qantas, said ticket prices are likely to moderate. That's not fall, that's just moderate, but they're still going to remain above pre-pandemic levels. Joyce says ticket prices are 20% higher than they were pre-pandemic. But government statistics say discount ticket prices, they're the ones that you and I buy, Michael, are almost 50% higher than a year ago. Now, demand is expected to remain strong with the economy now above pre-pandemic levels for domestic capacity. It's at around 81% for international. Joyce thanked customers for sticking with Qantas in recent months, particularly as service levels declined. In more recent times, data suggests the carrier has improved its on-time record and has reduced the number of cancellations as well. To wrap it all up, a record half year, probably a record full year, a big share buyback, and ticket prices are going to remain high. I think that's a big win for shareholders.
Yeah, sounds like it. I'll tell you what, though, interestingly, Sean, I was actually on the Qantas website yesterday booking some flights between kind of Sydney, Melbourne and return, and they had discount flights, and I don't know whether there was many of them, but it was $139, which is kind of back within kind of the range of what you previously used to pay. But the thing was, the website and the app kept crashing whenever you tried to book this. So you can only imagine people are on that like seagulls on a chip. It would just be remarkable, the demand for that kind of price, because they're not going to stick around.
So what happened? Qantas yesterday announced 1 million discount airfares, and then Virgin matched it. Well, didn't match it, but came and said, we'll do 250,000 discount airfares. That's really good. That's competition coming back into the market. So that's why you could get the $139, or at least attempt to get the $139 Sydney-Melbourne fare yesterday. It's part of that discounting that Qantas announced yesterday. More of that, the more airfare prices will fall.
Yeah, good stuff. All right, now, how did local markets perform yesterday?
Well, the S&P ASX 200 closed down 0.4% to 7,285 points. Now, that's the lowest level, or at least the lowest closing level since mid-January. BHP led the decline, dropping more than 3%, but it had plenty of friends. South 32 and Coles Group both fell more than 2%, while Woolworths, Rio, Wesfarmers and National Australia Bank, a motley crew, Michael, a motley crew, all dropped by 1% or more. WiseTech Global was the best of the large caps after its result on Wednesday. It finished up more than 4%. CSL was up more than 1%. Plenty of earnings news around yesterday. I'll just run through some of the bigger names. Nine announced an 11% drop in profit despite revenue being up strongly. Its share price finished down 3%. Ramsay Healthcare said pre-tax profit was up 12%. Basically, surgical activity levels rose post-COVID. That helped its share price yesterday. Logistics group Cube Holdings result impressed investors. Its share price jumped 9%. That was the best of the top 200. The other end of the spectrum was Bega Cheese. Its result wasn't appreciated, let's say, and its share price fell nearly 8%. Buy now, pay later operator Zipco. It posted a $33 million loss, but said business was improving as other players in the market fold. Interesting comment. Investors still sold that stock down. Atlas Arteria, the toll road group, it delivered a near 50% jump in full-year net profit. Cars and trucks basically are back on its toll roads in Europe and the US. However, it did say that flows on its newest acquisition, US's Chicago Skyway. We love that name, don't we?
Oh, the Skyway, yes. I forgot all about that.
Yeah, but the Skyway flows will be disrupted by roadworks this year. Takes a bit of the romanticism out of that one.
It does. I just prefer to still think of it as a road through the clouds.
Yeah, exactly. And finally, Australia's biggest car dealership, Eagers Automotive, announced a slightly lower profit for 2022, but it came out and said, we're actually in a really good position as society shifts towards electric vehicles because we actually sell more affordable brands. It's a good point. Anyway, its share price jumped 8.7% yesterday.
Now, international markets, Sean, what's been happening?
Well, the latest US Federal Reserve policy meeting minutes came out yesterday. They confirmed that higher rates lie ahead. Almost all Fed policymakers agree that ongoing increases are appropriate. That was enough to dampen spirits on Wall Street and push the US dollar higher, which of course impacted on the Australian dollar. In fact, at one point, the Aussie dollar fell below 68 US cents yesterday. It's since recovered somewhat to be trading around 68.3 US cents. In commodity markets, oil's come off a bit. Gold is steady, as are coal and iron ore. Cryptocurrencies, though, Michael, they're having a better time of it, with Bitcoin now trading around 24,500 US dollars a unit.
All right, there is plenty happening today. We'll be back in a moment with the rest of the day's business news. Sean, Star Entertainment Group will raise $800 million to shore up its finances after losing $1.3 billion last half thanks to a massive write-down of its Sydney casino's goodwill, penalties for wrongdoing and one-off costs to overhaul the casino business.
Yes, a very tough year for Star. I think that's fair. We had 2 state inquiries finding that it wasn't fit to hold a gaming licence, massive board and management upheaval, and a pretty shocking public relations disaster around money laundering and stuff like that. But it has been allowed to keep trading under supervision. Now, operating earnings for the 6 months to the end of December came in just under $100 million, which was much better than the COVID hit previous year. However, the very bottom line really was hammered by the write-downs and all those penalties. So Star is now in the market raising $800 million. It'll be interesting to see if that's enough to get it on its feet again.
There's a bit of economic news around yesterday, Sean. New wages data confirmed that earnings are on the rise and capital spending by businesses surging.
Yes, that latter information is good for economic growth. Private new capital expenditure during the December quarter jumped 2.2%, about twice the expected rate. Now, that will help the overall economic growth rate for the quarter. Business spending is really important. It's one of the more volatile parts of the economy. That's not a bad thing. I mean, consumers always tend to spend about the same amount of money, but business spending goes up and down. So December's number is good news for the local economy. Of course, next week we get December quarter economic growth figures. They're supposed to come in somewhere between 2.5% and 3%. The other data out yesterday from the Bureau of Statistics, the average weekly ordinary time earnings series, shows that full-time earnings rose 3.4%, and average weekly ordinary time earnings for full-time adults was $1,808. That's about $94,000 a year. That surprised me how high that is. Anyway, the quarterly increase was the highest in 2.5 years.
The average weekly ordinary time earnings series. It is not a catchy name.
A WOTI. So there's one of those economic terms that everyone talks about, a WOTI in the economics world.
Oh, is that actually how it's referred to?
A WOTI, A-W-O-T-E, a WOTI, average weekly ordinary time earnings.
Oh, that has made my day, a WOTI. I'm going to try and just drop that into everyday conversation.
When you're talking to Stephen Kakoulis next, just say, I like that, a WOTI.
Check out the size of that, a WOTI. maybe not quite like that.
No, maybe.
Medibank, Sean, lost almost 13,000 customers in the 3 months to the end of December after it was the target of Australia's biggest cyber heist, but things have improved this year.
Yes, Medibank said it expects costs to contain the fallout from last year's damaging cyber attack to rise. The company's already spent $26 million strengthening its cyber defences. Now, the group said Russian cyber criminals used a stolen Medibank username and password that was used by a third-party IT service provider. It then gained access to Medibank's network via a misconfigured firewall. I think that's like a misfiring firewall, I dare say. That firewall didn't require an additional digital security certificate, hence the hackers got in. After Medibank refused to pay the $15 million ransom, the hackers published the medical and claims data of policyholders on the dark web. Mind you, not many people actually understood what that said. Overall, the health insurer's first half net profit grew as international students flooded back to Australia. Its share price was up 6.5% yesterday.
Now, I mentioned this one at the top of the show. If you want a job, Sean, there's plenty of demand for garbos, so much that market leader Cleanaway is asking white-collar workers to put on the hazmat vest and drive the garbage trucks.
That's right. So all the head office people, not all of them, but some of them at Cleanaway are now driving trucks. It's basically about 670 jobs available for garbage truck drivers and waste plant employees. And it's having so much trouble finding people that managers and supervisors are now driving the trucks. The lack of people and use of external labour hire companies to help with trash collection is a big reason why Cleanaway's net profit for the final 6 months was down 7%, even though revenues were up 30%. Cleanaway has contracts with 130 local councils, 150,000 business customers. It runs 5,000 trucks collecting waste across the country. That's a lot of garbage.
It certainly is. I think it'd be a really difficult job because if I was to do it, I would hit so many cars.
Yes, I agree. They've got to be, and often they're driving on the wrong side of the road or the wrong side. They're driving a left-hand vehicle. I don't know how they do it.
But have you ever seen a more popular job with 3-year-olds? Kind of our kids always run out the front every time the garbage truck and they just stand there waving until they...
A lot of excitement.
Oh, it's great, isn't it? You would be very, very popular. Sean, Mineral Resources will pay close to $1 billion for a share in lithium hydroxide plants in China, having shelved plans to build a plant in Australia in partnership with battery minerals heavyweight Albemarle.
Mineral Resources boss Chris Ellison has been trying to convince Albemarle about the merits of building a lithium hydroxide plant in the Pilbara. Instead, yesterday, MinRes said it had agreed to acquire a 50% share of 2 plants in China at a cost of about $660 million. Ellison said MinRes will become one of the world's largest fully integrated lithium chemical suppliers to auto manufacturers. Just a shame, Michael, that the downstream processing isn't happening in Australia.
Yeah, it is. Now, one of the country's main regulators, the Australian Securities and Investments Commission, ASIC, is under fire after confidential letters revealed that complaints against one of the commissioners could be at least partially substantiated.
Yes, so the boss of the corporate watchdog, Joe Longo, is really under scrutiny, particularly his management style. According to the Financial Review, a letter from Treasury Secretary Stephen Kennedy to Mr. Longo about 12 months ago, in response to an investigation into Commissioner Karen Chester, said while there was insufficient basis to advise the Treasurer to take any further formal steps against Ms. Chester, the alleged conduct could be wholly or partially substantiated. Not a lot of detail, Michael, but this is the regulator of corporate behaviour being pulled up for its own corporate behaviour. Not a good look.
No, not at all. All right. International news, Sean. The ties that bind Moscow and Beijing are strengthening, it seems, with Russian President Vladimir Putin saying that he is waiting for his Chinese counterpart Xi Jinping to visit.
Ah, yes. He said cooperation between Russia and China is very important for stabilising the international situation, adding that the two countries are reaching new milestones, including in trade. In fact, he reckons the trade relationship between the two could soon hit $200 billion. Someone is benefiting from trading with China.
All right, Sean, for this final story, I felt a little bit bad from earlier in the podcast describing you as a nerd, because there's a certain amount of irony for anyone who knew me in high school or at university or basically any time since then in me calling somebody else a nerd. But it all comes down to how well you explain this next story, because I don't get it. Google has claimed a breakthrough in correcting the errors that are inherent in today's quantum computers, marking an early but potentially significant step in overcoming the biggest technical barrier to the revolutionary new form of computing.
Yes. Now, I'll do my best to explain this, and I have the Financial Times to thank for the story. So Google's findings have been published in the journal Nature. That's big time. We know quantum computing is a massive step forward, but currently quantum computers struggle to produce useful results because the quantum bits, qubits they're called, Q-U-B-I-T-S, qubits, only hold their information or data for a tiny fraction of a second. So that means information is lost before the machine can actually complete any calculations, because these qubits only hold this data for such a short period of time. Google's researchers say they've found a way to spread the information being processed in a quantum computer across a number of qubits in a way that means the system as a whole can retain enough data to complete calculations, even as individual qubits fall out of their quantum states. Early days, but this is definitely a step forward in the holy grail of quantum computing. Nature said there's only a 4% reduction in the error rate, not much. However, there was a reduction. Stay tuned, Michael.
It is very interesting, and I've managed to follow your description.
Well, as I said, Financial Times, excellent explainer.
So you're not taking any credit for it?
No, I can't.
All right. Up next is the Fear and Greed Daily interview. Your guest today, Sean, Dr. Sylvia Pfeiffer, CEO and founder of CoView.
Yeah, it's all about telehealth. CoView is the organisation that enables telehealth, and that really has changed Australia, particularly during the pandemic. Fascinating chat.
Yeah, it's a great one. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 24th of February, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook. Check out the new episode of How Do They Afford That as well. This week, it is all about financial resilience. I'm Michael Thompson, and that was Fear and Greed. Have a great day.